Hello, everyone, and welcome back to Southern Wealth. I do hope you're having a wonderful end of the weekend and that you're going to have a very good week ahead. If you do enjoy the content, please consider dropping that like and subscribe. Greatly helps the channel. So, thank you very much. Now, what I wanted to say, I wanted to discuss a little bit about what I call the short term noises and smokes and mirrors and why it tends to lead into people's disaster. So now it's the conversations around the government shutdown, and then a little bit later will come the debt ceiling problems, etc. We all know that no, the government will actually not shut down, and there's not going to be, and the US will not default on its debt, at least on a traditional way, in the sense of not paying people. It will maybe default in purchasing power by inflating the currency, but I seriously doubt that they will fail to raise the debt ceiling as we approach the deadlines and basically let the US default. But the point is, this intertwines with something else that I see, which is when I look at stocks, I try to focus on the long-term macro trends, the things that really influence the way things are moving within decades. So, for example, I do think international will do well this decade. I do think AI will be the most transformative stocks that you're going to see. The problem is there's a bit of an AI bubble. So we need to see that bubble deflate, see which ones survive, and those will be the key for growth. Inflation and the tolerance of the markets for inflation, higher rates, and for how long before they need to print and cut rates again. Those things matter more. Now, why am I talking about this? Because people, unfortunately, have a passion for trading and leverage, day trading and leverage trading. And on the top of every of those websites like eToro and Robin and things like that, you'll see 77% of our customers lose money with us. And that's actually misleading because the ones that win a little bit. The ones that lose, they lose everything. And the issue is that when you're looking at the charts all day long and you have investments placed, etc., more likely than not, you're going to make big mistakes. So in that context, what I'm trying to say is focusing on the longer time trends is more importantly. Understanding the big movers of the market. For example, the bond market dictates all the other markets. And not looking at, oh my God, commercial real estate, no. The big crises come from things that nobody expects. Big crises come from when everybody's euphoric and not when, like now, everybody's afraid. Every time there's a sell-off, oh my God, it's going to be a big depression. No, you need to have people convinced that every red candle is a big buying opportunity. You see, that's when the big crashes come. You need to understand that maybe we are entering into the new generation as baby boomers are retiring and the millennials are taking full force. That may lead to higher periods of inflation, at least in this decade. But then AI, with the productivity increases, may lead to deflation in the future. All these things are things that we should think about when we are looking at the future. And then, of course, making life decisions like, is this the right country to actually live? Are there better options for me elsewhere? Is this job going to exist in 10 or 15 years? So this kind of thinking is much more important than, oh my God, there's rumors that the government's going to shut down and we're going to default on the debt. I mean, no. Those things are all, if you will, the wrestling of politics. This happens from time to time. And every single time people play this little game where everybody gets very concerned. And then basically the good old same thing always happens because nobody's going to want to be accused of basically collapsing the entire, in this case, the entire world. Because I always find this funny, right? They have this idea that if the US completely collapses, the rest of the world is just fine. No, the economies are so intertwined right now, even the enemy economies, if you will, that this has impacts all across the world. And things that we should think about is, okay, is it likely that Trump is going to get elected? I don't know. At the moment, it seems so, but I don't know what kind of tricks or kind of accusations going to pull to basically try to put him in jail and prevent him from running. Because if he runs, I do think he's going to win, which means, what does that mean for our future? It means that most likely he will start drilling for oil and gas once again. He will resume the Keystone pipeline. So I would expect those oil prices to come down because, by the way, if the US puts oil and gas at full force, those reserves are bigger than Russia and Saudi Arabia combined, because the US is by far the biggest oil and gas producer in the world. But basically, if he starts pumping that side up, then energy prices come down, which means all the other costs of the economy, packaging, fertilizers, petrochemicals, transport, shipping, medical appliances, industrial production, all of those come lower, which means inflation comes lower, which means the Fed can now print more money. Now, am I advocating for him to be elected? No. What I'm trying to say is, if you foresee certain things into the future, like so for example, based on what I just said, if he wins, I am not planning to own oil, because I think he will increase the supply of oil into the markets brutally, which means it will cause the oil price to decrease. Now, does that mean it's going to collapse overnight, $40? No, it's not like that. But I see limited upside and extended downside. That's my point. So what I'm trying to say is, instead of looking at charts, in my opinion, and going here, red candle, green candle, oh my God, now this company is in distress, so basically it will collapse the entire banking market. And instead of going with those things, think about, at least this is what I do, I prefer to think about decade-wise, not so much. And then what I try to do is, if I find good entry points, I try to enter at lower prices, particularly when we have big sell-offs in certain industries. But this is what I do. I'm not giving you financial advice. I'm just telling you how I look at it. And if people already asked me in the past, oh, do you typically short markets? I said no. I say, why not? Because most of the time, the dollar, the euro, and any other currencies, they are losing value. Which means, you see, you need to imagine stock divided by US dollar price, or euro price, or yen price, Swiss franc price, you name it. If this part here is getting devalued almost every single year, even if this stock doesn't do anything better, it goes up in price. This is what happened with in the past decade, or the past 13 years. The money supply in the US increased something like 600 or 700%, and the S&P increased 600 or 700%. But if you actually look at the earnings of the companies adjusted for inflation, they didn't move that much. But the point is, the money supply did. Why? So that means that the currency, the denominator, got devalued. The value goes down, so it makes very little sense, in my opinion, in that scenario, to be shorting. But that's me. And if you want to short the market, there are a lot of people who do very well with that. And there's also another example that I usually give, which is, okay, let's say you buy Bitcoin at $1 and you sell it at $69,000. You just made a 69-fold return, okay? But now imagine that you shorted Bitcoin at 69,000 and it goes all the way down to $1. You made close to 100%. So 100% versus 69,000-fold, which is a 6.9 million percent. In my opinion, risk reward is not great. You have cryptos that go up 300% in a week, and during the bull market, you have certain cryptos that go up 10x in a week. That is much better, in my opinion, than shorting. That's why I don't do it. So this is answering some of your questions. But again, if you guys feel like shorting the market, shorting stocks, shorting commodities, shorting crypto, you name it, go ahead. Best of luck. As I've told you, I want you all to succeed. I am just here to explain my reasoning why I don't do it, not why you should or shouldn't do it. So thank you very much, guys, and I'll catch you in the next one.